I think it was reported earlier Goldman's had a fairly positive view on the semiconductor industry. You know, we remain positive about semiconductors long term, but we've been exiting some of the names that frankly are probably a little bit overvalued for this environment. One of those is NVIDIA. We had owned it for a while and we got out of that. And therefore we're moving our capital in semiconductors into what we regard as, shall we say, a little bit safer names like Taiwan Semiconductor in manufacturing for a range of different companies like Apple, NVIDIA and also AMD. So if you will, we're buying the manufacturers of picks and shovels, not the actual miners, as it were.
Okay, and what about the other end of that chain? You know, the Apples of this world and the equipment makers. What's your feeling on that particular space at the moment?
Well, we still own Apple. We think that the valuation is not that demanding right now in Apple. Obviously, that's a company in transition, but we liked their previous result in terms of development of their service revenues, and we'll be closely watching the next earnings call from Tim Cook on their progress. Elsewhere in tech, we've become quite, I wouldn't say defensive, but we've become much more cautious about the sorts of companies that we're buying. So we continue to own Microsoft, and that's our largest position. And we also like Cisco, because we think that we're still in the early stages of a turnaround. But a lot of the other companies we've avoided, like Google and Facebook and Amazon and Netflix, we're just well out of those. Out of that space.
Why? I mean, you only need to look at some of these numbers. So Facebook's up 54% year to date. You've got Amazon up around about 33% or so year to date. Kingsley, if you were in those names, you probably would have made some money. Something like Amazon's interesting as well, because once again, it's adding to its stripes here. I mean, you know, really pushing into the cloud computing market. Started off as a bookseller. I mean, this is a really interesting story, isn't it? As a company that can readily and successfully change.
I hear you, Ariel, but if you mentioned clearly there has been a good year-to-date performance, but I'd hasten to add that if you look back over a full 12-month period, Apple and Amazon are the only stocks in the FAANG group that are actually up. All the rest are down. And Microsoft is up by a substantial amount compared to both Amazon and Apple. So, you know, the stocks that we've owned over the last year have actually outperformed the FAANG, so we're pretty happy with our position. I think what I'm really trying to say is that these companies, they're fantastic companies, but they're rather late in the game for the size of market that they now command. And so the law of large numbers takes over and becomes much more difficult for them to post growth rates at the same rate.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.